I want to talk Tesla with you in just a minute, but first, we've seen rates come off the last few weeks. They're attracting attention as well. The TNX accelerating below 1.5%, while this month closing near multi-month lows to end last week. Okay, now off the lows, the extreme lows, but still near them. And I guess I'm wondering, is the market expecting a dovish Fed message this week from the FOMC? It seems to be suggesting Powell and crew are still a ways from tapering those asset purchases.
Listen, I think that everybody acknowledged that they had a more hawkish twist in the last meeting. And I don't think, really what they've emphasized the data, and they want to see the data. They want to be behind the curve. But the fact that they took a step down that hawkish road, I don't think the new surge in COVID cases is going to really knock them off that road. I think that we're going to see them stay that course. But remember, the Treasury prices, they rallied after, at least the long end of the curve, after that hawkish meeting, because the idea was they're not going to be able to taper, or if they did start to taper, it's going to slow the growth. So I am of the belief, though, that we're going to see growth pick up in the second half of the year. I think there's really two camps. You're either going to see that growth pick up, or you're going to see no growth at all. And I'm in that camp that I think we see a lot of growth in the second half of the year. I think the Fed does believe that too. I also am in the camp that believes inflation is going to stick around and it's going to be persistent through the second half of the year. So I think the Fed, that they were able to take a step down that hawkish road, and the market is still here. It's still here each day. I think that they're not going to back off of that just yet.
All right, let's talk a little bit about what rates to the downside have meant for banks and the impact that it has on them, the financial sector in general.
Yeah, the banks have taken it on the chin. I mean, especially the regional banks, and I've noted over the past few weeks that I've accumulated an overweight position in the bank, so it's hurt me a little bit. But I think that we're going to see that become a turning point now in the financial sector in general. I mean, you've seen some stocks really perform. I mean, even banks like Ally Bank is one of my largest bank holdings, and that's performed regardless of the rates pretty well. Then you look at others, some of the financial services. I mean, you got Morgan Stanley, T. Rowe Price. Those have done really well. I do own T. Rowe Price, and then you got the credit card services. They've done great too. So the financial sector in general hasn't really just kind of fallen apart. Yeah. It's those banks, those regional banks. But again, I think that we're going to see this become a turning point in the second half of the year. We're
looking at the XLF here right now, and it hasn't fallen apart. You can see it's holding. 38.60 was the recent high we saw earlier this summer. We're talking the first week in June, and it's holding 36.42. Let's move on here, though, because we looked at energies at the top of the show, 77 roughly to 65. I'm calling it now, the July high and low. The energy stocks that I saw today were on the move higher, even though crude was kind of limited. I saw the Brent tire, WTI was slightly lower, but nothing to get too worked up about. But I saw Schlumberger, Devon, I saw COG, Apache, APA, a couple names that were on the move higher today and supporting the S&Ps.
Yeah, that's been a really nice move, nice rebound to see here today, amid really an otherwise lackluster session, sort of leading that market to hold ground and probably laying that groundwork for fairly strong last hour. Now, another sector that we're overweight in right now is energies, and that's underperformed recently too. So yeah, it's just one of those times here for the last 30-45 days. It hasn't been exactly how we anticipated, but it doesn't mean that we're going to just start changing our strategy right away. This is a second half of the year story, and I think that growth is going to show up. Now, with that said, it's great to see the energies bounce here today, but for now, it really is just a bounce. I do think, and I'm a commodity guy at heart, I think crude oil is going to $80 here this year. I think crude oil will be at $100 potentially next year, and I think that's going to lead these energy stocks higher. And overall, it's despite the higher highs in crude oil, about say over the last month, not over the last week, but about over the last month, the energy stocks didn't do that. So I think, though, the next time that crude does start to make those new highs, we're going to see the energy stocks join the party. Now, I'm not sitting here saying that we're going to see crude go straight up from here. 72.50 is a big resistance level. So listen, I'm holding my energies in the fact that I know they may not perform through this next week or through this next month, but I expect them. Remember, they've performed very well. What are they up 30 to 40% this year? They've performed very well this year, and I expect the second half of the year to fall in line with that.
We just had the weekly time frame up here, and the move that we saw recently, shy of $80, but back to levels we haven't seen since the fall of 2014. If we could just pull this chart again real quick. This is the weekly time frame again, and you can see it was short-lived up and through the 77 level. But we also earlier in the show looked at how crude's back up above the 50-day moving average, and I did want to just point out, you were talking about XLF or the financials in general, how some of the banks, individual names have taken a hit, but the ETF hasn't really. I pointed out, it seems like the XLE recently finding some support right around that 46 level. So we'll see if they can add or build on some of that momentum off that level that we saw last week to begin the week. Let's talk a little bit about Tesla. I mentioned at the beginning of this discussion, big tech certainly a focal point for many, with the Alphabet, Apple, Tesla today seems to be front and center. Expecting to report record profits. Expectations are for them to continue to show they can increase output. I'm hearing analysts are looking for around something like 230,000, 231,000 vehicles delivered for the current quarter. What are you going to be looking for here, Bill?
Well, sticking with the vehicles, the sustainable revenues and sustainable demand from the higher priced vehicles, higher priced models. So I think that's something that's going to be very important. It comments on China. I like Tesla. It's not a stock that we own outright. I own it in a very centric ETF for the time being right now to reduce a little bit of risk out there. But overall, I do think that Tesla, I mean, it's a cult-like story, and I think that whether you hate it or you like it, the technicals are there. The company's starting to turn profit, and they're building their own ecosystem. So, whether that be the software side, whether that be a satellite and internet side, whether that be battery side, I mean, they're going to be there. The same things that you heard about Amazon, decade ago, 2 decades ago. You're starting to hear the same sort of things of Tesla, and really what they're building is a brand, a cult-like following, and they're building their own ecosystem. And a decade from now, I expect the stock to be a lot higher. So I think a lot of components, like I said, are we seeing the higher price models find sustainable revenues and demand right here, right now? What are the comments on China? And so it should be an interesting report.
China could be huge, as you mentioned. I have heard in terms of some of those higher price vehicles that some of the lower price vehicles have taken away some of the demand from them. But interesting to stay tuned to some of those numbers here today to see how that.
700. That's the technical level. I forgot to mention that. I mean, obviously, I think everybody probably notices this trend line from the highs that we're right up against right now. If we start breaking above there, but really it's 700. I mean, we've closed above 700. I mean, I don't see why we won't go to 760, 780 pretty quickly. Another 10% move. Certainly
found support 550 to 600 recently. We've double bottom there, so we'll see if we can continue to hold that. And I did see Elon Musk said that their biggest challenge is supply chains from the microcontroller chips. They've never seen anything like this, apparently, and fear of running out is causing, he said, every company to over-order. Kind of equated it to the toilet paper shortage that we had seen, but he called this on an epic scale. So something to watch here in terms of and listen for as far as some of the comments. Bill, really appreciate you joining us here and giving us part of your Monday afternoon to start the week here on the TD Ameritrade Network. The president of Blue Line Futures, Bill Baruch, thanks again.